Well, the activity in the Norwegian economy is high, and there's little spare capacity. Unemployment has fallen more than expected and is currently at a very low level. So we have a very tight labour market. At the same time, inflation has picked up and is higher than expected and markedly above the inflation target. So prospects for a more prolonged period of high inflation suggest the need to raise policy rates and to raise the policy rate faster and more than envisaged in March.
You are not alone in taking a more hawkish, more aggressive stance on policy right now. To what extent have other central banks and higher expected policy rates abroad affected your thinking?
Both international inflation pressures and higher international interest rates do affect policy in Norway, both through the direct effect on our imported inflation, but also through the exchange rate. So higher interest rates internationally in isolation pulls in the direction of a weaker krone, which also influences price prospects here in Norway. So that has contributed to the lifting of our rate path.
In terms of the policy path from here, I understand that earlier this morning you commented that you couldn't rule out raising by more than 25 basis points in future rate meetings. Help us understand, help investors understand what you are going to be assessing and what would justify another 50 basis point hike at your August meeting.
So the policy path that we present today is consistent with 25 basis points rises at the meetings, remaining interest rate meetings this year, and then further hikes to around 3% before summer next year. But of course, the economic outlook is uncertain, and if the outlook changes, then the interest rate path would respond to that. The committee is concerned with the risks that limited spare capacity in the Norwegian economy, elevated international price impulses, and a weaker krone could cause inflation to remain higher for longer, which would suggest the need to raise interest rates more or faster. On the other hand, there are also risks on the downside related to the risks of a sharper slowdown in the international economy, and also risks that higher interest rates in Norway will have a stronger impact on the housing market and household consumption. So there are risks on both sides.